Welcome to this episode number 102 of Your Next Trade, called today Deal 1. As always, if you like what you're watching today, please put a like, put a comment. That will help in doing this on a weekly basis. So yes, we finally got a Deal 1, which actually didn't take that long as the tariffs were announced on the 2nd of April. So it took a bit more than a month, and this deal has been happening with the UK, which actually, as we're going to see right now, is a bit of a funny one, because if you think about it, the UK has been running a surplus versus the US. So if you look at the top 5-6 countries which have been running a surplus, a trade surplus with the US, we are talking first the Netherlands. Actually, the UK are in position number 5. So that means, that should have been an easy deal for the US compared with the deals that were going to be much, much harder to do. We are talking China, number 1. We are talking, Europe as well, which is in the top 5 of the countries or the regions that are running a surplus, a deficit, should I say, where the US are running a deficit. So what has been the deal? Actually, the deal for the US is very, very good. So now, as we can see here, the tariffs, they managed to reduce the tariffs on the way in. So that means the UK tariffs were at 5.1%, now they are 1.8%. And on the way out for the UK, from the UK to the US, we are talking now the tariffs, instead of being 3.4%, at 10%. So there are some question marks here if the UK had to do a deal, because Starmer is in a bad political position. But still, that is a first deal. That is a pretty good deal for the US, and that means maybe this is the start of the art of the deal. So let's see in terms of market what happened, starting with the week-to-date asset performance. This is a regime that we have been experiencing over the last 2 to 3 weeks, which actually, after the OPEX, the option expiry, we had a strong market. We are talking stocks which went from 5,300 to 56, 5,700. And since we reached the 5,700, and as we're going to see across asset classes, this is more or less the same. We have been trading sideways. So if you look at the S&P, down 0.5%, Nasdaq has been flattish. So more or less most assets, we are talking stocks in the US, flattish. That is the same for most countries. Currencies, that's the same, with the US dollar flattish against most currencies. The only one that is really standing out is Bitcoin. So we had strong crypto, Bitcoin very, very strong, above the $100,000. That was on Friday or Thursday. And what we saw is a massive inflows in the ETFs on the crypto. One of the ETFs managed to have 4 billion of inflows, and when you get inflows in ETFs, that means retail is buying, and that means your assets is going higher. So very, very strong crypto over the last week, really outperforming the other asset classes. Gold 2.6%, and WI 4.7%. And WTI, this is interesting as well, because we went below the $60 level, but we didn't make new lows. So as we're going to see for the charts, the chart is not that bad. So what about the week-to-date industry performance? If you look at the S&P, if you look at the Nasdaq roughly here, and the Russell, flattish. Okay, so this is more or less flat on the week, and you see dispersion between the winners and the losers. So on the left-hand side, you get biotech, XBI, you get pharmaceuticals, XLV, healthcare. Why? Because the reason, you always get somewhere on reason. We had a new boss for the FDA, which is the regulator for anything that is biotech, that is pharma, and the market didn't like it that much. So the sector, the industry was really punished. We are talking 4% to 8% on average. So that is a space to be looking at, because we do know that biotech and pharma is seeing over time a lot of capex. So there are question marks, about research, about how companies are going to invest in that space. Other end of the spectrum, we are talking airlines actually that were really strong: gold, solar, transportation, silver. So as we see here, despite the market being flattish, we do have like a bit of tails on the way on the right and on the left. Other than that, we are talking 70-80% of the industry sectors that are flattish. So what about the sector performance? Really, the only one that is standing is the healthcare, as we said. new FDA boss, and that changed the politics in that industry. What about rates? Looking at the US 10 years, we are talking 4.38%. So we can't really going down in terms of yields for the US 10 years. That has been one of the targets of the US administration. But so far, actually, the range has been between 4 to 4.7%. When you go above 4.5%, this is trouble. And since we had the tariff story, actually the yields on the 10 years didn't manage to come down that much. One of the reasons as well is we do have like a lot of bond supply coming every single month. And that means to meet this demand, you need higher yields. Now looking at the Fed funds expectations, we had the FOMC meeting on Wednesday, where more or less the Fed said two things: the risk on inflations are going up, and the Fed on the risk on unemployment are going up. So a bit like wait and see, data dependent, blah blah blah. But no change. That was the deal. Now, what is the Fed expectations? We are talking 2 to 3 cuts between now and the rest of the year. So the first cut, when is it going to be happening? For the time being, we are talking mostly September. We move from July into September. One of the reasons is in August, most of the time the Fed will be changing and talking about its policy going forward. So they do have like a big meeting at the end of August. And now many analysts are saying, you know, this is what's going to be happening. They're going to be changing from September onwards. So let's see. What about the VIX? Volatility, 22%. That is a very interesting one. Why? Because volatility is still pretty high. We are talking implied volatility. Realized volatility has been pretty smashed. So if we look actually at the straddle for the week, we didn't move that much. We are talking week on week, Friday to Friday, we were down 0.5%, where, as you maybe remembered last week, we look at the S&P straddle and we were talking more than 2%. So volatility, implied volatility is still pretty high. We saw a lot of inflows from funds, from CTAs that are selling volatility. The expectations from specialists are still that we're going to see more volatility compression going forward, as long as, you know, there's no big news. And that means when we see volatility compression, you see as well the underlying going up. So let's look now at the technical analysis, starting with the S&P futures. If I manage to do it up, so this is for the S&P futures. Here we go. So we broke the trend, we are going higher, and as I said, you know, the region that I like very much, the area that I like very much as a short is probably 5800, 5830. For the time being, you know, 5700, my view is still that we're going to be squeezing a bit higher. We have been consolidating over the last few days. I like the 200 moving average. I like the trend here. I like the concentration that we have over here. There is a possibility that actually we could be pushing a bit higher, because if you look at the S&P, the JP Morgan collar, the level is 5900 on the S&P. So for the time being, I'm pretty neutral. I want to believe that it's going to be squeezing higher. The reason is in terms of risk reward. I don't like to be short around this level. Chart of the Nasdaq is more or less the same. We are trading sideways. We have been trading sideways like the S&P after the bonds that we started 10 days after the tariffs. This is pretty much the same chart. I want to go into CL1, as I told you before. It's about WTI. Why? Because actually WTI managed to bounce nicely over the week. You see here, you don't have new lows. So we had the lows at the start of April, but since then, you know, on Monday, that was not new lows, despite the fact that we're going to have more supply. I like some of the price action actually from WTI. I saw some research. I think Bank of America was saying that we should be overweight XLE going forward. So this is really a space in terms of ID generation that I'm looking at. What about gold? 33.24. Same kind of price action, trading sideways, not much of a direction. No new highs. Actually, they have been denying the new high. So price action is the inversion of the almost of the oil. I don't like it very much going forward. Google, why we want to mention Google? Because we had a big announcement on Thursday where Apple said actually they want to rely less and less on Google search, and they are looking at alternatives for especially for the search and for AI. The stock didn't like that much. It was actually a good trade at 163 on 1 month, and it went to 148 roughly intraday. So a really, really big move. And finally, from time to time, we talk about crypto, a very big move on crypto, 100,000 and above. So this is the move as we see here. And as we explained, it's mostly because of obviously inflows. We saw tons of inflows of ETFs in that space. The highs were 109, 110. So we are 4 to 5% below that. Strong momentum for the time being. So let's go back into what happened for the week. Starting with the S&P, as you can see, we are flattish most of the week. We try to sell off, but in very low volume. Overall, on the week, we are flattish. So we had the announcement of the tariffs UK deal that was very much flagged. What is important is over the weekend, we get China and the US sitting in Geneva, in Switzerland, and there are some obviously waiting and hope that the deal is going to be something is going to be announced. If you think about such big countries, it's going to be hard to have a deal. So the talk is, are we going to go from 125% to 80% or 60%? I have absolutely no clue. Most people will be looking at how the futures will be opening, what are going to be the talks. For the time being, this is, talks between countries. We don't have much more than that. So this is for your Monday opening, and that was the expectations on Friday, where the market was really, really quiet, not much happening. So as I said, Google search, as you can see here, this is most of Google, Apple, Microsoft, and how the stock has been behaving. So here, this is the one in pink. So this is in the middle of the pack. Still, it is roughly 20% down for the year. Tesla is underperforming. But as you can see, we are roughly moving like the others. So this is for the time being some kind of bank move. Going forward, we believe in the trading community that there is a lot of trades to generate from here. We are talking, if you think about the numbers of companies that are generating revenues from Google search, that are putting, all of the most of their businesses through Google search. We are talking Etsy, we are talking some other names. So if you want to know more, you should be joining our most advanced channels on the trading community. But we believe that actually it's Google search changes are going to be generating many trades. What about what we had as well? As we said, the FOMC meeting, there's risks on jobs and inflation, but this is more or less wait and see from Powell. We had as well a bit of a fight between India and Pakistan that started a week or 10 days ago, and we've been lucky. We look at the Indian ETF, and we had one of the subscribers on the free channel that suggested MMYT. So this is ID generation. When we get something happening, we always try to look at where there is a good trade to make. An easy one for me is always to look at the ETFs. You look at the ETFs of the country, and then you try to find out what are the names that are standing out in this ETF. So this was for the week. And as well, I want to reiterate that the market regime is the more or less, it's the same again and again. So what we like to share with you is, what the indexes, the basket have been doing. And as you can see, this is the hard to borrow retail. This is the Bitcoin. This is the Momo Long. This is, the names that we've seen, the same sectors that are outperforming the market. So S&P was down 0.5%, but retail is pretty much in control. You see Palantir doing pretty well. We've seen Duolingo as well doing well. CVNA came out with their earnings, and the stock, squeezed as well. So pretty much really the same story. Market flattish, but the retail, the volatility compression doing very well. So now I'm interested in hopefully what's going to be happening next. So let's start with some macroeconomics with the core retail sales. So it's going to be on Thursday. And as you can see, so far it has been pretty well over the last couple of months. As always, January is a bit of a so-so month because there is distortion in the numbers. So if you can go year on year, always January is a bit of a problem. But overall, the question has been, we've seen consumer confidence in the US pretty bad. We've seen a lot of headlines from tariffs in the ISM and so forth. But, US consumer has been holding pretty well. So we get some conflicts between, some macro numbers, soft data, hard data, and we would like to get a better picture with the retail sales. We do have like the CPI inflation and the PPI. So you see the trajectory of inflation since the post-COVID. So we went into so that should be in percentage terms. So we are talking 8% roughly on the CPI month on month. And now we are coming into almost 0%. So there was some talks that, are we going to start to see negative inflation or flattish inflation? And this is Trump has been pretty vocal in saying, the Fed is very late and actually they should be cutting rates. So are we going to see a bounce in inflation due to tariffs? So this is a space to be looking at. The Fed is looking at it. The market is looking at it. So this is for inflation. What about OPEX? We do have like on Friday, the option expiry. We remember, you don't remember that at the last OPEX, we actually rallied very quickly from 5,300 to 5,700. Since then, 1 week after the OPEX, we kind of trading sideways over the last couple of weeks. Now, my view is there's a good chance we're going to be squeezing a bit more. I'm still targeting the 5,800 for the S&P, 58 to 5830. And then I want to believe that, the market, depending on, the news that we're going to have, if we don't see that many good news on tariffs, that we could see in terms of risk reward, the market going lower in the second half of this month. In terms of numbers from the companies, we're still going to have earnings. So we get Cisco on Wednesday. This is the one I'm be looking at, and I'm going to be looking on Thursday on Deere and Walmart. Walmart because of retail, Deere because I like the big picture coming from that company. We do have like many conferences as well. I didn't put them here. There's some from Bank of America. So they will give us, companies will give us some updates about what is happening for them. Finally, we do have like this SPY weekly straddle plus minus 2.3% for the week. So more or less what we had this week. And we have on Thursday Powell that is talking. So this is the catalyst. Obviously, as always, we're going to have the tariffs, US, China. What has been said over the weekend and every single day, you should be assured that Trump is going to be tweeting, and it's even more true because he is flying to the Middle East on Tuesday and for the next 3 to 4 days. So we should be seeing headlines on that space. He's going to be announcing big contracts for the US. He's going to be announcing, what's going to be happening for the Middle East and for oil. So this is it for me for this week. As always, if you get questions on the 4x4 video series or on the mentoring, if you want to join the trading community, there is one free channel. You do have like access as well to 30 channels beyond the paywall. Any questions, you send me an email here. And other than that, I wish you a happy trading week. Bye-bye.